Hello, Oracles and money lovers. Welcome back to episode 14 of the Oracle Investment Club Tesla Weekly. We'll be branching out into some more macro environment stuff today as well, as you guys seem to like that. So we'll branch out and do some more of that stuff. But Vin, how was your week this past week?
Pretty good. We got a little bit of green here. I'm not convinced if we're entirely out of the woods yet, but yeah, I mean, as far as the macro stuff, we know from the Fed minutes last week, Fed has said that they will increase interest rates to levels high enough to, deliberately slow economic growth if they have to in this race to get rid of inflation. We got some interesting news. Apple and Microsoft are a couple of the companies that are increasing workers' pay, and it kind of makes you think, how bad can things actually be? A lot of companies seem to be doing just fine. They did cite like we're in a very tight labor market, which is good. And it actually it's cheaper and more efficient for the companies to pay workers more than to find new employees.
Yeah, even at my job, we have been just slamming. We have been doing amazing. Profits are through the roof, and we're having the same thing, which is, we have employees. We don't want to lose them because we can't find anybody. We literally cannot get people to apply for our jobs. So when we have anybody who is out there, because other companies are trying to recruit from us, and so we're like, well, we'll pay more. So we gave one of our guys a significant pay raise to keep him. Now we did kind of shift his position, so it's a little bit of a step up. So we can at least justify it, but still, that's what we're doing. And so I'm have no doubt that the companies like the Apples and the Microsofts of the world, know this, and their employees are going to talk to each other and say, hey, well, if they're making this much money, I want to make this much money also. And so they're going to start paying more, and so they're just going to raise the pay to match that. I mean, you figure if inflation's going up as much as it is, and their profits are going up as much as they are, then they can easily afford to pay them to keep them.
Right. And it's interesting. This all kind of comes on the back of, a couple weeks ago, we had Target and Walmart kind of sent a shock through the market. People are saying, retail is slowing down here. But then we got some other reports from other retailers, like Dick's Sporting Goods was one of the ones I was reading about, that kind of had a more optimistic outlook. They weren't great reports, but they didn't think that, we were headed for trouble. They basically said everything's fine and sales are kind of stabilizing. They don't believe we're headed for a recession. And even it's interesting, you look at Target, while certain categories sales are down, but it's things like luggage and travel are up 50%. So it's almost like the consumer doesn't seem to be slowing down. They're just spending their money elsewhere. Where people want to get out, the pandemic plays may suffer, and the items that were super hot, when everyone's stuck at home, it'd be interesting to see how that impacts, Home Depot and companies like that. But seems like consumer still has plenty of money to spend, which will definitely help, avoid a recession, I think, as long as that lasts.
Yeah, and looking at the stock market obviously cycles. Right now we're cycling into oil. Where can you make money? People are putting it into oil. I have no doubt it's the same thing that goes for consumers. They're cycling different things. I know for me, I haven't traveled in 2 years, and I'm just extremely excited about traveling. Did New Hampshire last weekend. I'm already planning another New Hampshire trip in 4th of July. Probably going up to Maine for Labor Day weekend, and I'm planning another trip for November for my birthday. So people are definitely looking to get back out there, and I know I'm one of them. So I can definitely see the cycling of that. And like you said, how is this going to balance when it comes to actual retail and spending? Is it going to balance where we don't go into a recession, or is it just not going to be enough? Or is this kind of like, all right, once the traveling is done, then everybody's going to hunker back down and just watch their spending again? Who knows? But if we've got companies like Apple who, are out there, obviously huge employers, and they're cranking up pay for a lot of people, that's going to put pressure on other companies to also raise the pay for people. So then the pay is going to go back up again. And so now the money is trickling down to people, and then spending can go back up again. So, we'll know at the end of July if we're actually getting this recession. But as of right now, it's tough to call. It seems like we're heading in that direction, especially with the housing market. But if companies are going to start paying their people more, then maybe not.
Yeah, it'll definitely be interesting to see the kind of cycle through, like you said. And the other big issue I think that just continues to linger here that doesn't seem like it's going to get any better until maybe the Ukraine crisis situation improves. But a lot of nations are expanding and extending their curbs on exports. So this is something that a lot of the experts are saying is going to just further exacerbate these shortages, and we have this major global food price inflation that really is an issue. I mean, we're obviously feeling it here too, but it really hits like the developing countries even harder. And all in all, I think about 26 countries have implemented export restrictions on food and fertilizers. While all these countries are struggling with high inflation, and it's just amazing to think about because I don't know if anyone watches the All In podcast. The one guy, David Freeberg, he was talking about this 6 months ago or more that we were going to have a coming global food shortage, a crisis, as largely due to Ukraine, and it was kind of many months before the major news outlets picked up on it. And now I feel like I am starting to see them talk about it more. And a lot of this has to do with, Russia's got the blockade of Ukrainian ports. And I think Ukraine and Russia export some 30% of the world's wheat. Obviously, not helping with oil either, fertilizers, all that good stuff.
Yeah, and and it's the longer this Russia Ukraine thing goes on, it's going to be twofold for me because obviously the food shortage is terrible, and the oil is part of the reason why oil is going so high is bringing the whole market down. So people are taking the money out of stocks and putting it in oil because that's where they can make money. But you also have to take a look at the fact that Europe right now has decided, by the end of the year, I think they said 90% of Europe is going to be off of Russian oil. So they're going to learn how to survive without it. So Russia's not going to have that as an option. And so that's going to enhance and accelerate the transition over to renewable energy. So we're going to have that happening. They're going to find other sources for it, and they're going to end up doing the same thing for food. So they're going to figure it out. We're just in the transition right now where it's going to stink and be really difficult for a lot of people. And unfortunately, the people who suffer the most are the people who are at the bottom of this food chain.
Right.
But they're going to get through this. We're going to figure it out. And that's again, looking at the future, what implications does this have for the future? And if we're looking at this transition to, renewable energy and EVs, and they're kind of forcing the hand with this due to the oil and the Russia-Ukraine war, that's the place where I want to put my money is in the future. Because yes, the next 6 to 12 months could stink, but coming out of it, what's going to thrive? It's not like, a year from now, all of a sudden the EU is going to be like, all right, well, the Russia-Ukraine war is over. We're now going to get Russian oil again. Because if they do go that direction, it's going to be very minimal because they've learned how to live without it. And I think that's going to be a huge transition over the next year. And then the food, and then of course you look at all the food plants that are getting burned down. Like, how ironic is that they all just happen to be catching fire and burning down? And I mean, we can put our tinfoil hats on and get into conspiracy theories about this, but it's just stepping outside of it, being like, what kind of a coincidence in it is it that all of these places are having this problem, and we have got the Russia-Ukraine situation, and then food price and food shortages. Like,
And
is
then
it?
China doesn't help either with their lockdowns, with the
Yeah,
supply
I'm like,
chain.
is this a real problem that we're facing, or is it a fabricated problem that we're facing? I don't know. You guys can let us know in the comments what your thoughts are on this. My tinfoil hat only takes me so far on here. But
Yeah,
but I
it's
mean, I wouldn't put it past them. Knowing our governments and what they have done in the past, I wouldn't put it past them for this. Well, I hate to think that way, but
yeah.
um,
Nothing's out of
it,
the question. I mean, from what we've seen here, though, especially the last couple of years, it's pretty insane. And just going back to the oil in Europe, I mean, that'll be really interesting to see them get off of 90% of it by the end of the year. Well, that'll be fun. And I know the U.S. is planning to increase our exports to Europe because Americans are only paying $5, or if you're in California, $7.20 a gallon. So
jeez.
we're gonna export more. I know that you love when they do that.
Oh, I know, and it's funny because like I look at the fact that I don't know what the numbers are. I thought at one point we were importing more oil than we were using our own, and I'm like, why? What? Like, you would think that using your own would be cheaper, but we're not, and I don't know how that all works. Whatever. But I did learn today that I guess looking at most of our national debt and who owns our debt, and a lot of it is owned by China and Saudi Arabia. So that's probably why we do a lot of business with them with their oil, because we're trying to play this money game with them. But I mean, like I made a video this morning talking about the gas prices being so high, and it's like, is it because the left is not doing anything intentionally to keep gas prices high to drive the EV adoption up and change over the world and the country to renewable energy faster? I don't know. That's a theory that I had, but I'm like, in the meantime, all of us down at the bottom are sucking wind right now. I'm like we can't survive. Most people are scraping to get by, and now gas prices, like people are literally going to work to earn enough money to fill their gas tank up, and that's it. They can't pay for anything else other than filling their gas tank up. So there's got to be a better way than how we're doing it right now. I mean, I don't know, but if we are going to be exporting oil over to Europe, then we've got to do something. Like I'm not a fan of it. Obviously, we want to see renewable energy go up. That's how we want to roll in the future. But if we're going to be exporting oil, then how are we going to get this oil? We don't even have enough for ourselves. How are we now going to export it also? That's my question.
Definitely, no, great points. And like you said, this is only going to fast track EV adoption. I think here in the short to medium term here,